My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Whatever happened to the Death Star? The old nickname for Amazon back when it seemed like an unstoppable superweapon. I still love Amazon. Prime's a great value. Amazon Web Service, dominant cloud infrastructure play, and their advertising business on fire. But the Death Star? Not after this quarter. On a solid day when the Dow gained 31 points, S&P advanced 0.15%, record close. NASDAQ climbed 0.52% to close above 15,000, another record. I can tell you that this quarter will go down as the quarter where brick and mortar struck back. And the Death Star is no more. In retrospect, maybe not the most intimidating nickname, given that the Death Star does get blown up at the end of the movie. Of course, it wasn't the force that destroyed the Amazon Death Star myth. It started subtly with mass vaccinations when we realized that CVS, a leader in the process, wasn't going anywhere, wasn't rolling over. Despite how the stock was constantly getting kicked to the curb every time there was a new rumor about Amazon getting into the pharmacy business. CVS is no longer a frumpy old pharmacy that can't go toe-to-toe with the digital colossus. I don't know where you got your shots, assuming you got them at all, but if you went to the local CVS like I did, you might have seen more of a minute clinic in the store. Meanwhile, we've learned something about human behavior. People don't like getting their medicine by mail. It's too unreliable. Amazon's been trying to upend the pharmacy business for ages, and let's just call it a failure, please. Now the vaccine program has given CVS a new lease on life. You can't get that vaccine through Amazon, and we've discovered that there's a lot more to it than we thought. Okay, how about Target? Now, when they acquired Shipt, and that's S-H-I-P-T, if you look at the conference calls, the transcript always says S-H-I-P-P-E-D, so we'll get that straight. Shipt, the same-day delivery service, we knew they meant business. These days, Target also has the best buy online, pick up in store. I really do. You measure them, I think it's the best one. As CEO Brian Cornell explained on a conference call, quote, we added numbered parking lots so that we can find your black SUV among the 12 black SUVs. I like that. He really has a sense of humor, but he does allow you to figure out what it looks like, right? They even got a Target app that lets the customers avoid the promo FOMO, their nickname for, that they use for fear of missing out on the best deals. I like the fact that a local Target of mine in Brooklyn has a third floor largely dedicated to local school uniforms. If you see Amazon having that kind of thing, let me know, all right? Walmart's made some major moves, too, including today's somewhat quizzical news about the Go Local delivery service, which will also serve other businesses. Arguably, this is a rival to DoorDash. Maybe it's an olive branch to smaller stores that are worried about being crushed by Amazon or by Walmart. Go Local's too small to be a needle mover, although I still think that Walmart, I like it enough that I do on it for my charitable trust. You can follow along by joining the ActionAlertsPlus.com club, where we have a very big club called tomorrow. I'm going to be talking about Walmart. Now, I think the Walmart Plus offering, where you get unlimited free delivery, is gaining some traction. Recently, the company, they started selling private label insulin at 58 to 75% discount to the cash price of brand name insulin. That's a stunningly great idea. It goes into the stores. They've done a terrific job with the vaccine rollout. But let me tell you something. If I were running the company, which, by the way, I don't, I'd start using Walmart Plus to give people the best deals on drug prices, just like GoodRx does. That's a fabulous way to bring business into the store, but it's also a great way to sign up people for Walmart Plus. They can use Walmart's tremendous buying clout. Oh, God, I want to do that so bad. All right, well, I put ideas out there. Let's see if they're adopted. But if there was any doubt about the end of Amazon's Death Star status, well, we've got to talk about one of the most impressive turnarounds. We got to talk about Best Buy. That put it to bed. Now, this is the most miraculous story in retail right now. The stock jumped more than 8% today, not just because Best Buy offers the strongest customer service in electronics, but also because they've introduced a brilliant new service, at-home tech support, that's as good as what you get at the office. Maybe better. Of course, as recently as April, most of us thought America would go all in on vaccinations. The idea that we still need at-home tech support might have seemed ludicrous. perhaps as ludicrous as Abbott Labs making all those millions of COVID tests in a moment when we believe the virus was almost wiped out. As ludicrous as the idea that companies would have to keep shelling out for cybersecurity to protect all those home offices. Yet now Abbott's on the cusp of a blowout quarter because people can't get enough of its at-home COVID tests. Palo Alto Networks, best-of-breed cybersecurity outfit on last night, rallied almost 20% today on an amazing set of numbers. But perhaps the most impressive is what Best Buy's got going, and that's the Total Tech membership program. As CEO Corey Barry described it, you get, quote, unlimited Geek Squad technical support on all the technology in their home, no matter where or when you purchase it, including 24/7 dedicated phone and chat teams, end quote. She also throws in 24 months of product production on most purchases, not to mention free delivery for in-store purchases, standard installation, exclusive member pricing, 60-day extended return windows, free shipping for online orders. You get it. This is really good. Best Buy's Total Tech program has already exceeded expectations. It was called beta, and now it's total. And it's easy to see why. Think about this. You probably have an IT department to help you at work, right, in the central office? But what do you have at home? You have nothing to speak of, right? Well, Zoom goes down. What are you going to do? Which is a problem now that so many people work from home because we never beat the pandemic. Best Buy is basically replacing corporate tech support for remote workers. When you're on that Zoom call, you're going to be calling the Geek Squad. And it's not going to cost you anything other than the membership club. That's what Barry's done here. Created a membership club that will be an annuity for Best Buy. The people who join are going to buy their electronics from Best Buy, not Amazon. I can remember when we used to joke that Best Buy was merely a showroom for Amazon. Ha ha. But now they've turned the tables on the so-called Death Star, and it is working. This stock has more room to run. Look for multiple upgrades, perhaps as soon as tomorrow. Then there are the companies that have always had the jump on Amazon, and the one there you have to think about is Costco. Now, Costco offers what I call extreme value, meaning the best price per given quantity and quality of an item. Tell me you don't like that term, extreme. They have some of the lowest markups in the industry, while Amazon's more like a typical retailer. Plus, Costco pre-selects great items for you, at times getting them for next to nothing, as we basically gave them our delicious Lesser Evil popcorn for a Christmas promotion before we went broke. And you can't beat the fact that you can get a 40 case of Kirkland water bottles for a little more than $3. How can they do that? Oh, and there's a hot tip. By the way, you can get a bottle of water for $1 when you walk through the door. Have you ever noticed that the people you see working at your Costco are always the same? They got the least turnover of any retailer, not just because they offer the best pay and best benefits. I think people genuinely like working there. They always look like they're having a good time. At least as anyone can work in a very tough industry, retail. Don't worry, my folks did it. I'm not making fun. That means Costco's customers get the highest quality service in retail. Oh, and let's not forget their fabulous private label brands that are almost superior, or I think are superior to nationally branded stuff. They're paper towels. Is there anyone that uses others? I don't know. And not to mention the chain's whimsical sense of humor, repeated with free samples to back it up. Until this quarter, though, I always feared that with the exception of Walmart and Costco, Amazon could run any of these companies into the ground whenever they felt like it. Instead, the former Death Star is now messing around with brick and mortar. No doubt just to learn about what its competitors already know. If Amazon really needs physical drop-offs, they should just stop trying to reinvent the wheel. Hey, maybe even give up on Whole Foods, which they don't do that good a job on, and buy Kohl's, where they already have some pre-existing return drop-off relationship. Oh, come on, you know they don't do as good a job with Whole Foods. Not like the old days. It's just not. Anyway, bottom line, Amazon's Death Star days, they're done. The remaining brick-and-mortar retailers have their force fields, and they're beaming Amazon's projectiles right back at the once invincible digital retailer. I still like the company and the stock, but it's no longer laying waste to the entire industry as it used to. How about Mark in Florida? Mark.
Hi, Jim. Thanks
Mark.
for the excellent insight you so generously share and for that recommendation of Doximity.
Oh, what a company that is. Bunch of my doctors told me to recommend that, just so you know. And they did it without me knowing that I was, it just happens to be one of them right here. The issue with Doximity is not everybody knows about it. As they do, it's just going to get bigger and bigger. How can I help you?
My question concerns a stock I bought in July at $59. Since then, it steadily declined, and then a large recall hit it further, although there was a bit of a bounce today. What do you suggest I do with my holdings in General Motors?
I think you can hold General Motors. I think you can buy Ford. I think that, by the way, Ford represents superior value. It's up 35 cents today. Ford's going to have by far the best product lineup. I think Ford's going to be a monster stock. Monster. Antonio in Michigan. Antonio.
Hey, Jim. You've talked about the stock a few times. I believe the last time was back in May. But since then, the stock has gone down quite a bit, and I was wondering, with their recent acquisitions of Pago Effecto and Via Fentech, I was curious if we're still in on the Bill Foley-backed PaySafe.
Boy, I'll tell you, it's like a lot of the other SPACs. It's just a disaster. It's down 42%. Frankly, I wish I never heard of the word SPAC. Is it a word? Anyway, look, the days of Amazon being the retail Death Star, I'm pronouncing them over. Brick and mortar striking back, and companies like CVS, Target, Walmart, Best Buy, and Costco are giving Amazon a real run for its money. On Mad Money tonight, Denbury Resources is undergoing a complete transformation from bankruptcy to a 170% gain this year alone. So could the company focused on being the leader of carbon capture continue to capture the attention of Wall Street? Let's talk to the CEO. And U.S. Treasuries have seen their yields plummet over the last few months. So where could bonds be headed next? And you know how important that is for the stock market. I'm going off the charts. And Prothena is on a mission to help millions of Americans suffering from Alzheimer's. I'm checking in with the top brass to learn more about their technology, how it can be applied to other diseases, and you're never going to feel the same about this company. You have to listen to this, so why don't you stay with Cramer?
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.